Hey folks, it's Stolen Ward McCarthy here, bringing you your update for the general GTA real estate market and also kind of our projections in terms of prices and interest rates, inflation moving forward. So here we go. Let's jump into our first chart, which is basically demand. What is our demand or our buyer sales in the market? So here you can see this orange graph. We came into the year quite strong in terms of demand. Trump gets elected, talk of tariffs, February, March, April, our demand has kind of dropped off a cliff. Literally, when you look at year over year data, you can see here April 24 to 25, that's a 23% drop. Granted, it's a 12% increase over March, month over month data, but that's going to happen anyways. As you can see, that's the trend going into the year, that supply increases into the springtime. What's next? Yes, so to tie in with that demand, that's your buyer basically. Let's look at consumer confidence. Here we go, consumer confidence at an all-time low, lower than the 2008 financial crisis, lower than the shutdown for COVID in 2020. Can you imagine that? Also similarly, small business confidence index, also lower than both of those two monumental dates in terms of drop in consumer confidence. So let's jump forward to supply. So we've looked at demand, not doing so well, buyer, consumer confidence. Now let's look at supply, the other side of the equation. So supply here, we came in very strong in the year with supply up very, very strong. And it's even increased even stronger, 8% increase year over year for April data. Up month over month, 9%. But I mean, this graph looks okay, but I think the bigger telling sign is when we look at the data here in this chart for the active listings. So that's up 54%. So that's the product that's staying on the market and not selling. Because our property days in market, you can see here, is up 22% year over year. It's actually up 33% month over month. You can see here in our absorption rate chart as well too, condos are in very, very strong buyer market territory. Freehold homes are in a balanced but pushing towards sellers market territory. So you've got now your buyer sentiment, consumer confidence very low, buyers not buying as much, very conscious about their job. And then you've got supply products sitting on the market. So obviously we're going to expect that's going to create a lot of pressure on prices. You can see here prices, and I've always been bullish about how strong and resilient the Toronto house prices have been over the last years, even with high interest rates. You know, we had our big dip of 20% from February to July of 2022, and then it seemed to hold its own. I'm not so bullish anymore. We are starting to see a bit of pressure year over year. We had a 4% drop here from April. Granted, prices increased from March to April month over month by just 1%. I'm thinking now with the jobs data, Toronto's unemployment is at 8.6%. So that seems to be growing. And with the active listings, buyer sentiment down, you know, I feel that there may actually be a price pressure downwards. Okay, let's look at our next chart. We'll kind of look at the general idea what's going to, oh yeah, here's the chart as well too. I wanted to point out, you can see here average prices in all these categories, both in the 416 and the 905, there's only one category that's kind of held its price year over year, and that's townhomes in the 416 neighborhood. Everything else is down. You can see there in this chart, you know, 6.8% for detached in the 416, semi-detached in the 905s down 5%, 7.3% down in condos in the 416, etc., etc. Next, let's jump into, there's the chart I mentioned earlier on Toronto unemployment rate. You can see here how that has increased from January of 2023 pretty steadily all the way to today, where it's about 8.6% unemployment rate. That's expected to rise. I mean, just today, Honda announced a $16 billion project for the ERV line that's going to be axed from Alliston. It's going to be a lot more news like that, folks. Where are we at in inflation? And you can see your inflation. Now, the reason the Bank of Canada probably held rates the same in March was because of this number here. Inflation seemed to be taking off again at 2.6, but it dropped down to 2.3% in March, probably giving them the window to drop rates by 0.25% in June on the next announcement. There you have it, folks. Thanks for bearing with me this long. If you need anything, any data at all, or any questions about real estate, we're here for you. Ciao, ciao.